Evening, everyone. So the first edition of our training for August 2021. Been a crazy start to the year. Lots and lots of good happened. We've got 5 funded traders in our team. The amount we've learned about the process, each other, the funding, how all that works, withdrawal, it's been an absolute wonderful start to the year, and we're looking forward to one of you on this call becoming the next funded trader. It's going to happen. It's going to happen. There's just too much good stuff in this academy for you not to be successful. So let's kick it off. We've got an action-packed call tonight. What I'm going to do first of all is just talk to you before I look at charts. Like, I'm going to go through a trade tonight where I lost last week, and it's probably the most important part of trading is finding someone that talks about losing, because everyone loses. Pros, market geometry specialists, market technicians, people in the banks, hedge funds, especially retail traders like us. Everyone loses. So what I want to be like always open and transparent with you guys is, if you're shying away from losing, then your mentality is wrong. What that means is you'll probably do things that will cause you to lose. You just won't be acting the right way. So if a trade lines up, you take it. That is it. Simple as that. No more like, oh, I'm looking for more confirmations. We've got a pattern, we've got geometry, and then we do our thing, which I'm going to show you tonight. I'm going to go through it every single week. I'm just going to go through a trade. This is how we plot the trade. This is how we get in. This is what happens. And with this trade, I'm going to show you that the trade wasn't bad, but there's definitely a way I could have avoided a loss, which I'm going to show you all, because we're all human. We can all make mistakes, and it's not about just talking about the glory. We've got to be real. All right, people, you are going to lose. You are going to lose. It's about what you do next. It's about assessing where you lost, clearing your head, moving on to the next one. It lines up, take it. Yeah, none of this. Well, the last one lost, so I'm just going to wait and see what happens. No. Line up, get it in, get your trade on, and get about your day. All right. It's really important to have that. Like, it's got to be like so drilled into your head that whether you win or lose is irrelevant. It's a game of numbers. It's probability. We've got so much in our favor. If you're executing the trading plan properly, you're going to win. You're going to win more than you lose. All right. So I'm just letting Fiona in. Just wait for her to join. And then I'm going to break down this chart. So Fiona, thanks for jumping on. You just missed so far. I was talking about losing and being okay to lose, being disciplined, learning from your losses, but not shying away from it, because when you lose, it's just part of the game. So we've been through that. I'm now going to go through NZDCAD with everyone and show you all how I lost on this trade last week. All right, so I'm just going to share my screen. Lots to cover tonight as well, some exciting stuff. Right, so you should all be able to see my screen. So let me know if you can see clearly.
Yeah, it's good, Chris.
You got it? Nice one. All right, so I'm going to just move the chart to like here. Okay, so this is my markup for, blimey, I had it marked up for a couple of weeks, waiting for it. So initially I saw the first 2 hits, this swing low here where it started. We've got a hit, that's all like the same zone. So this is like all one hit. It breaks the high, that's then hit 1, pulls back to the trend line, hit number 2. It then went off and made a new high. It's now coming back to the trend line. And this was our third hit. So what I was looking for here was reasons to get in the market. This was not on the harmonic scanner, but this was good market structure. We want the third hit. So we've got 1, 2, third hit on the trend at some form of support and resistance, which there is some very, very obvious level of support here. And the market came to it. And then you've got like underneath a couple of times, a bit of a PRZ zone, a little bit scrappy, but really, really clean here, really nice here. So the market's moved its way down. What I look to do, I'll go through my checklist. So it's not a pattern on the harmonic scanner, but we've got a third hit on the trend. Have we got structure? Well, I just mentioned the yellow box here that we draw across. You get to that box via the menu on the left. Next is I'm going to look at fib levels. So you can go from like the first one, you probably want to start from the nearest swing point. So you click from low to high. Okay, and this pullback, what we're doing, this is the impulse, we're measuring the pullback. So how far has it come back? You can see that 88% bang on that structure level. 88% is like a discounted value range. That's like, in English, that's where kind of the banks operate. So when I see it retrace deeper than the 786, the 618, you know, only means that there's a lot of power in the market coming, hopefully, with kind of the gist. Also look at layering your fibs, so you can look at this low to this high. And you can see we've got a 786, if I zoom in. See that? We've got the 88%, we've got the 786, which is basically where the structure point is. So everything looking absolutely beautiful. Absolutely beautiful. See what happens next. We've got two reasons to trade. We've got 786, we've got the 88%. We can then look at an extension level where you draw it backwards. And look, we've got a 1618 from this structure point in the market here. It's extended past the low to a 1618. Right, so we've got three fib levels within 10 pips of each other. So I'm really interested, really interested. I wasn't bothered that it broke the line because I thought it would reach for the structure. And then the fibs give me what's called commonality. All that means is that in one place in the market, you've got multiple areas of like interesting fib levels. All right, so tick, we've got fib levels. Have we got divergence? All right, so this is where I made my error. All right, we are all human. We make errors. Okay, so when you're looking for divergence, you want to be looking from the swing point. Swing point. This is the swing. This is the swing. Yeah. So you got it pulls down. It then goes. It then pulls back. It pulls down, and I was waiting to buy from here into the new next impulse up. What I did is I went from this point, which is not a swing point. Yeah, you see that's just in the market. That's not a swing point. So I went from here to here and thought, oh, the market's going down, but the volume's going up. All right, the actual place to market from was here because it was this swing point. And you can clearly see that that is slightly going down and the market is going down. So there's no divergence. So that's where I messed up. Okay, it happens. No drama. So what I do now is I put in my journal, NZDCAD, waiting for it for 2 weeks. I messed up with the divergence. So next trade I do, I make sure that my divergence, I'm spotting it correctly. You're just helping yourself out. All right, so we've got fib levels, we've got divergence that I thought I had. So everything I'm ticking. Right. Have we got on the hour Hikanashi candles? Have we got the DC channel at entry? Right, DC channel's this blue line. Yes, bang, entry on the 88, on the 76, on the 1618 area. Bosh, tick. Right, I'm dropping down. Let me just put a vertical line in. So when was this? 28th. Is that correct? 7th. That's August. Right, this is Wednesday. Right, so everything looking hunky-dory. Hunky-dory. Okay. So now, DC channel hit on the hour. We're dropping to the 15-minute. This is where we become legends. This is where we start to look for entry. Okay. I think I missed the first entry. Basically, what we're looking for is we're looking for a flat, a blue candle that's flat at the bottom, and it closes above this blue squiggly line. The blue squiggly line is the 4 McGinley. All right, that is the first candle that looks like it. Okay, but we need a blue bar on the AO. We've got. We need blue above red on the stotch. We've got. And then we need blue above red on the DMI and the black line above the 4. So the DMI is not ready. Okay, the DMI is not ready. So we wait. It goes off. It goes off. We're just watching the DMI, waiting for it to trigger. It goes off. Okay, down. So this DMI saves us all this anguish of entering a trade and it's still consolidating before it. All right, so we've got the wrong way. The red's now over. The red's in control. We're waiting. We're lions. We're waiting. We're waiting. We're patient. We're patient. We're patient. Then test that area again. Doink. Good sound effects. We've got a little doji going on. We've got a spike above the highs. If you know about Hikanashi candles, then have a manipulation candle, and then bingo, we get another flat bottom crossing above the 4. We've got a blue line on the AO, blue above red on the stotch, but we haven't got the black line above the 40. Yeah, we've got the blue above red, the black line, that's the control bar. That's not in control yet. So we wait. It's not in control there either. It's close. And this is where when you lack discipline, this will be where you just jump in anyway. Everyone's done it. Don't do it. Okay, don't do it. 9 times out of 10, it's not ready to enter. So bang, the next one there where you see my first entry, boom, entered there, wallop. Put my stop loss below the low. Yeah, the low's here. My stop loss with my spread is below the low. I'm in. Everything looking hunky-dory. We got the second entry really fast. Second entry is when the blue crosses the black. I waited for the pullback because I actually missed it, but then saw it pull back. So I actually entered the market right there on this one. And I used the same stop loss because I wasn't really on the charts. I was on my phone. So my stop way below the low. Everyone's happy. Third entry is when the 4 crosses the red, the 50. Bingo. And that's when I entered my third entry. Wallop. Right, we're in 3 times. So what you do then is you go back to the hour. Okay, and you are looking. You would have worked your risk reward out where you're waiting for it to trigger. Draw your fibs from high to low. Yeah, the low is here when I got in. And this is what I do. It's just my habit. You don't have to do it, but it does help. The 38.2 is TP1. So I'll just put a horizontal ray, 38.2. 618 is TP2. 100%, so the equal high is TP3. We aim on the first two entries, we aim for TP3. Okay. Then we've got the extension is the 127, which is where we aim for on the third entry. What does that mean from, like, if you're looking at it as like an investor mindset, you know, risking 1%, 2%, 3%, or 0.5%, 1%, 1.5%. Well, the first one is giving you a 1 to 11 risk reward. Amazing. The second one, if I can get on it. First one. Second one, 1 to 11 risk reward. Third one, 1 to 9. Okay, the third one usually is the worst risk reward because you're already well into the trade. But we've got 11, 11, 9, 31% gain by risking 3. All right, that's what I really want you to pay attention to this, because your risk reward ratio will make you worry less about losing. Because yeah, I lost on this one, but I know that if the next one wins, I don't even remember that loss because the wins are so much bigger than the losses. Remember the 3 types of trader? You got the winner that just goes up like an uptrend. That's who you want to be. You're going to lose. That's what the pullback is. When your account drops a little bit, that's your pullback. And then you're going to win the next one. And then you make an account growth every day of the week. But this one did not go to plan. So it went off like a rocket. I was up pretty nice because the stop loss was only like 18 pips. So I was already covered. I was covering my risk pretty much on the first two by this point. And then it started getting consolidation. It came back down to entry, giving us not what I wanted to see. What you want to see on the hour is the hour trigger. Cross the 20, cross the 50, then the 20 and the 50 cross going up, and then it pulls back down to the lines. That is what you want to see, not this. So basically, it's come up to the cloud. All right, this is referred to as the cloud in the Pro Entry Masterclass. Pulls up to the cloud and bounces off. So not ideal. This went on, hit my stop loss. I then stopped paying attention because I had H on Monday, so I had Hayden over. But look, this is why I wait for divergence. Okay, I thought I had it. I'm a doofus, as Hayden likes to call me recently. I thought I had it because I was marking it up from the wrong spot. I didn't have it here. But if you look between this swing and this swing, the market is going down, the AO is going up. You've got a negative, positive, negative relationship. That is sweet. So if I was watching, I would be looking to get an entry from here. And bang, you've got it there, right there. Gosh, that risk reward would be ridiculous. Let's make it right at the top of the wick. Right, you put your stop loss below the low. 26. You're aiming for TP3. 1 to 8. Very nice. Then you've got the second entry, which triggered here. You get the drift, yeah. Triggers, you enter. Mark up your entry candle zone, which is this, basically the other side of the structure. And you're aiming for TP3. All right. Third entry triggers. What? Did anyone spot what I did wrong again? Anyone spot it? Not on the 15 minute. This is the low. We've got divergence on the hour. We're looking for entry. No, no. Bingo. This one is our entry candle. You see, it's just poked above the 40. We've got a blue bar and a blue above red on the stotch. Was it this one? Yes, this little one. All right, so we'd enter at the top of that candle. Bingo. Our stop loss is going to be here, 16 pips. That's more like it. Then we're aiming for TP3. That's more like it. 1 to 13. That sounds better. Right, second entry. 4 crosses the 20, the black line. You can see it's annoyingly getting in the way. But let's go like here, just to be on the safe side. You can go below the low again, same sort of stuff. All the way up to TP3. But whatever. All right, and then the third one is when the 4 and the 50 cross, candle closes. Let's go here. And let's say we put it under the structure. It's already in momentum, and we're going for the 127 here. Right, so let's add these up. So we've got 13, 10, 23, and another 13, nearly 14. Wow. So we've got 36%. So, okay, we've lost 3 over here. Going to risk another 3, or you could risk 0.5% on each entry. So you're 1.5. You risk another 1.5. Taken off. Look, it's just gone up. It's gone the hour. This is what you want to see on the hour, which didn't happen here. As the lines approach, they cross. Don't mind that little pullback. They cross, but then the 20 and the 50 do that. That is what you want to see. That is a full-blown uptrend or shifting trend. Boom, we had the divergence. That's what set the trade up better than the one that I ended. Now this is rocketing, absolutely rocketing. It's hit TP1, it's on its way to TP2. You know, you're deep in profit. You'd be at break even on your trades more than likely, and you're just waiting for it to hit your TP. You know, it's not just going to go straight up. It's going to go up, come back. It should bounce off the 20, go back up, bounce off the 20, go back up. And that, my friends, you need one of those in your life a month, and you are absolutely flying. Absolutely flying. But the message really, we've all seen trades that go well, but I did want to show you one where I messed up, because you're going to do it too. The divergence is there. See the swing low to the swing low? It's like hidden divergence. And then it pulled up. But I completely misread it. I thought it was I was doing it from here to here. I was doing it from here to here. Got it wrong. So a tip for you when you're looking for divergence is to re-emphasize again, you're doing it from a swing low to a swing low, not just anywhere in the market. It needs to be from a swing point. You could come all the way back here to do it. And there was divergence there. The market is going up. But it's quite a long time ago. And the line is, the AO is going down. So there's too much going on for me. I want to see it negative, positive, negative. I want to see it a bit closer, if possible. And that is that. So don't worry about losing. Like, it is part of the game. I think we should talk more about it too. It should just be part of what we do, because blimey, like, you don't want to be like shy about losing, because everyone does it. You know, it's like brushing your teeth. Everyone brushes their teeth. You know, it's no drama. Like, we're going to lose, we enter the next one. But what I think people do is they think, you know, I'm in this pressurized situation where I've got to pass a funded account test. People lose all the time on their tests. People lose all the time on their account. It's about executing your trading plan, which is what I just went through, how you enter the market, basically, having a good risk reward ratio, which you can see there, we've got, and executing, trying not to make errors. So that one's on me. I made an error. I should have waited for the divergence. I should have spotted that cleaner. Hey ho, we live another day. What can happen is the people that aren't very good at managing their risk, you know, they could have blown their whole account on that error. So the fact that you guys know how to work out your lot size, how to, you know, be sensible with your risk. If it loses, you live to trade another day. So there hasn't got to be a pressure on one trade. Does that make sense? Hope that makes sense. Don't worry about losing. It is natural. It is part of the process. Okie doke. Any questions on that? Any questions? Thanks, Fiona. Good, good. Anybody with any other questions before I move on? All right. So is it still continuing an uptrend? Yeah, I believe so now that it's the 1 hour's crossed like this. Yeah, that was the move I was looking for. I was waiting for it. Fiona, for you, let's just go into this in a bit more detail, because I'll show you what I spotted. So look, we just join the dots up here, like a line down. If we go from here, this swing point, to here, we've got like a little triangle. This is a type of correction, like a falling wedge, they call it. Actually start there. So you've got the falling wedge. This is a correction. Yeah, I just missed the correction. So the correction does a certain pattern, but look, as you enter, it's breaking the upside of that pattern, and then retest the outside, breaks, retest, gone. So, you know, there's other ways to see if you're in the right place at the right time. But yeah, definitely, I'd be, if I. This is another thing too. Like, you're not going to catch every move unless you're on the charts all day, every day. Like you've got another job, you are going to miss some setups. And again, don't fear missing out. It is, again, unless you want to be married to this chart, it's that, again, is part of the process. Yes, Bill. Yeah, look by zooming out more. Definitely. Yeah, go back. Look at when you're getting closer to price. That's when you're looking at entry to figure out the trend. You want more information. So you want to look at a more of a historical view. Yeah. So look, definitely zoom out. Look back. For sure. Cool. Right. Let's move on. Very quickly, I'm going to put a reminder in our group after our call tonight. But the plan is to go ahead with a team meetup session on the 14th of August. I know some of you can't make it. Trying to organise something that everyone can make. You know, we'll just never get a date in the diary. So there'll be more. If you missed this one, there'll be others. And you know, I'm going to come up to London a bit more as well for the people that are based up there. So, you know, just get involved as much as you can. But I want to, historically, this team, i.e. Bryony and Des's team, are very, very social. We get together all the time, like every Wednesday night now, starting, I think, the next week. But check the rotor on Telegram. They do live training David Game College. So any of you that went to that Saturday event I didn't make in the end, every single Wednesday you can meet up with everyone and you talk about trading. So that's the community they spent years building, but lockdown made it virtual. So it's now slowly coming back to being personal, and I definitely want to carry that on in Bournemouth, and when I'm in London, meet up with people, because it's great to hang out with people that think the way we do. So yeah, keep your eyes peeled for more events. We've got other things planned, which I'll probably speak about next week, because I haven't finalised. But on the weekend of that our get together, that session, there is something called Summer Slam, which is basically what it's what Manny Q's been going on about for ages. It's actually where he is launching his new scanner for Pro Entry. So we will be, we will have the opportunity, if everyone's interested. It's on Friday and Saturday, so the 13th and the 14th, and I'm going to pay for it. It's like $50, and I'm going to give you guys the Zoom link, and I'm going to cast it. So it's called a watch party or whatever, but you guys have the chance then to see what all these educators, it's all about trading. So I'll give you all access, and just try and get in as much of it as you can. But on the Saturday night when we go for dinner, for those that are coming, I'm going to try and organise a venue where we've got a telly. I know a few, so that we can have it on whilst we're, get in, have dinner, and whilst we're having a couple of drinks, watch Manny release the new scanner, because he's on at about 9:30 p.m. So we might not remember all of it, but yeah, it will be recorded, so you'll be able to watch it back on other days anyway. All right, so Summer Slam. I'm looking forward to Manny's new scanner. The way it's basically an algorithm for the way I'm teaching you all the trade. With the trend, all the confirmations, it's just not on the harmonic scanner, it's the scanner he's built for this strategy in mind. Sensational. So I'm really, really looking forward to that. Just on the note of Manny, I put a message in the group. I put a new trading plan in the group too. He's changed his videos and what they're called and what they look like when you go into his favorites. So I've now updated the trading plan. So look on our Fastrack to Freedom group for the latest version, so you don't get confused when you get into boot camp. But I watched his boot camp session today. It was really, really good. Really good. I've heard some very, very good things about the boot camp. This new version is way, way more detailed than the old one. So all the people that have been through the old one, feel free to get on his new sessions too. Sorry, someone just tried to join the meeting. I didn't know who they were, so I just paused. Okay, so we'll be doing that. In terms of the scanner, let's have a little look. I always like to do a little bit of time on the harmonic scanner. Let's see what's been cooking. It's been a bit of a quiet day, so kind of want to just not set expectations, kind of a bit like, but not childish, you know what I mean? A bit like too formal. But sometimes when the scanner's been a bit quiet, to be honest, and sometimes we just got to take a step back and kind of understand why. So if you think about just economic climate, we've been in a lockdown pandemic for God knows how long, and banks have been able to trade, fairly normally, but very actively, even if they've changed tactics. But if you think about it now, the world has opened up. People are allowed to go on holiday. The first half of the year is done, which is, reporting element for banks and hedge funds. Half one is done. July, people go away. you know, people go on holiday, especially the traders in a bank. They're absolutely gods. You know, they're considered pretty much de la creme. So if you think about like, just like step back and think about all these people that are normally active, well, some of them are not going to be there. So it's going to be less active. And we've got NFP this week, which is a huge sort of US macroeconomic news release. So everything's shaping up. There's loads and loads and loads that I've got my eye on, which I'll run through with you too. But, you know, sometimes it is quiet. The summer is notoriously a little bit slower than like spring, because everyone's on holiday. You know, it's not just that, but, you know, that's the easiest way to understand it. There's less activity, but it will gear up again. Okay, it will gear up again. So just stick to the plan. Try not to get too caught up in trying to find a trade and then maybe going to FX choice and, you know, looking at these other brokers because there's more patterns. You know, feel free to try and test them. I haven't. I did Hot Forex. It worked. So there's nothing new on the scanner. So when you know it's new, it's the D point. There won't be many candles afterwards. There might not be any. That's where you want to be looking at these fresh scans. All of these are old, and they're there for you to do some analysis on. If you want to, you can look at the trend. You can try and figure out why it went up, if it was in a downtrend, or, you know, you can do your thing. Huge market structure reversal going on, it looks like, on UChef. You can just use that for your sort of educational purposes. Now, to tell you what I'm sort of keeping my eye on at the moment, I popped this in the group earlier. So we've got three fib levels, a 618 from here, and two 127 extensions, I believe, from like these areas in here. That one. Yeah, we've got that one, 127. Don't know what the other one was with this earlier. So we've got a 127 extension from this area, a 127 from this area, and a 618 pullback on the last swing high. So that's my area of interest. So I'm looking for other reasons now. So the market's developed a little bit more. So I'll be looking for this correction to end. It looks a little bit like a flag at the moment. What kind of going on? So I'll be waiting for it to sort of make its way up through the flag, hit here, look for this is a structure anyway. I've already checked, and then look for the sell. Be the third hit on NZDCAD. So absolutely looking forward to that one. NZDCAD kind of looks quite similar. So we've got a huge sell-off. So ignore all the numbers and stuff. Don't worry too much about that. What I'm looking for is another hit here. All right, so I'm waiting for this correction to be done, and then I'm waiting for any selling bias. So again, as this starts developing, I'll be looking for fib levels, commonality, structure. There's some lovely structure already in there. I'll look back historically. It's nowhere near ready yet, so that's what I'm waiting for. AJ, kind of the same. So we've got a pullback, big sell-off, and this is a one large correction. So I'm waiting for it to. I've got my alert set, hoping it spikes it tomorrow. Comes up. It's here, lovely structure. There's two 88% retracements and a PRZ zone. I'm waiting for the sell-off on that. AU. Again, you know, me and my fibs, I absolutely love them. But basically this area here is a commonality level with fibs. We've got a little channel coming up. So just waiting for, that's the second hit, so I'll be a little bit more careful on that one. But I'll be looking for fib levels, divergence close to price. Maybe look at the 4 hour because of how long it's been since it's hit first. You know, you just want to try and get the trend right. That's the biggest thing. The entry is the easy bit. It's getting the trend right that's difficult. What have we got here? All right, so CAD chef's a little bit more advanced, so I'm not going to go through it. It's not a clear trend line. EA is going to be ages away. I'll just go to the 4 hours. Right, so I'm looking for the third hit. Oh, it's not okay. So I'm just waiting for the third hit. It's kind of making this. This is a correction pattern where you're getting higher lows, higher lows. You've got a structure point. It squeezes into that area, and then normally pops up and goes higher. So I'm waiting for the third entry. Now it could come above this area, which would be perfect, but you just got to be patient. I'm waiting for that one. Like it's, you know, a long way away, but hey ho. EJ. Again, we've got the market structure reversal. It was going up. Now the low, all these lows have been taken out. Now I'm waiting for it to swing underneath to get us a second hit. Done a bit more work on this with fibs. So I've got a 127, a 618, a 50, and two 113 extensions. So the more fibs you can get, like in that box, in that little box, all those fib levels, like if it goes there, it's going to bounce off it like a bazooka. There is one higher up as well, just in case it really spikes. There is some news this week. So there's one slightly higher, but I prefer this one. We'll see what happens. GA, what have I got for GA? Okay, so GA, we've just got very early uptrend. It's kind of looks like a channel. It's been going up for ages. The pound's been rallying. January, look, it's not made a new low since the turn of the year, pretty much. So this is just rallying up. So it's gonna get exhausted. I'm not too sure which way it's gonna go. So marked up ready. This will be the second hit on this little trend. See what happens. NZDCAD's been and gone. So there is a re-entry in there, but I prefer to take the whole move for you. Okay, so this one just looks interesting. So we've got a third hit coming on the sell. We've also got this, you can see this like triangle forming. So whenever it does this, I don't try and predict. I just wait for it to break one of the lines. I prefer it to hit on the third, as close to this line as possible, at structure with divergence, hopefully with a scan, and then wait for it to drop, break underneath. It could do something like that, or it could break it before it hit the trend line, and then swing underneath and hit it. So I'm just waiting patiently. Excuse me. You're just waiting patiently for that third hit. I did a lot of these today. I got kind of tired of it, to be honest. So I'm going to do the second half tomorrow in more detail. But that's what I've got. That is what I've got. I look at the scanner as much as possible, try and refresh it, see what's going on. Anything new on the 4 hour? We've got UJ hit stop loss. Okay, we've got EN hit DP2, but that's not in a trend. That's consolidating, just moving sideways. So we just sit on our hands. Like it's an expression. It's an expression that we use, that we've sort of, had fun with. But when at times like this, you just be patient. It's a real good time when the market's slow to jump into education, mindset, personal development, all the mindset, personal development, all that stuff. I was so resistant to, this. I didn't really see the point in it at the start, but that's where the control of your emotions come from. And when you've taken in all this information, you understand that, when you know the way to do it, it's just a matter of time until you make money. It's a very nice position to be in, but then your mind can play tricks on you. Yeah, so your mind can then say like, okay, well, if you're, you're right most of the time, then let's risk more, and then you get into like sticky water. So all the personal development stuff, it's a good time to do it when it's quiet. You should be doing some at least every day, even if it's 90 seconds, just imagining what it's going to feel like being a funded trader, and not having to go to work every day, having money and having freedom. 90 seconds, that is it. That's all you need, but you can do so much more. So a lot of the times the answers aren't in the charts because you know what you're doing, especially if you've been here a long time. The answer is within you, a little bit deep, a little bit spiritual of me. True. All right. The charts, a lot of the time, you know what you're doing once you finish the education. It's all about just executing without errors, unlike what I did last week. Also, just to finish off, the whole point of this first group is to get through the education. So once you've watched all the videos and you feel that you know the strategy and you've practiced and you've watched the videos a few times, what you need to do is book in a call with me. We'll do a one-to-one. Then I will watch you explain the strategy. And it isn't for me to then like make you feel uncomfortable. It's so that I can help you. So I can say, these bits you've got really good, but you need to wait for this, this, and this, or do it in this order, or I look for this. I can just pour into you the experience that I've had. And then once you're confident with the strategy, because that's all that really matters. You then go into the demo test group. That's where it starts getting a little bit more serious. You open a demo with FTMO if you haven't already, free trial, and you are then practicing for your test. The next progression onto that is to take your test. The whole point of that group is to be in momentum. All right, so you don't want to get in there and still not be sure of the strategy, and then still working on your strategy. Like, when you're in that group, you're on a mission. You're on a mission to get funded. So you only go in there once you've got it. Okay. So yeah, cheers, Simon. Thanks, mate. That's the plan. That's how it works. That's how the other 5 have got funded, or us 5 have got funded. It's a system that works, so I'm not going to change it. In the demo test group, feel free to discuss your trades. There was a question in our original on the Fastrack to Freedom group about sharing trade ideas. If it makes you guys happy, do it. I will not be paying attention, but I don't mind sharing charts. That's different. Just sharing charts saying, this is what I see. Do you think? That's cool. That's good. But I would never, ever put, I'm buying NZDCAD. Go, go, go. Stop loss is 28 pips. No, I'm not doing that. I don't expect anyone to do that. Yeah, just keeping the purpose of the groups in line, really. And then when you're funded, it's a whole new level in that group. Everyone's been tested. Everyone that's funded has had highs, lows. They start off quite extreme because you've been trying to get this golden goose for so long, and then you've got it, and then the emotions again kick in at a different level. So personal development again is so important. And then after a while, you just sort of relax and get comfortable with it, and then you're off and running. But every step up is like a new version of you, like a better version of you, whether it's trading, whether it's mindset, whatever it is, skill. Every step up requires you to be better. Wicked, 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 wicked. Right. Has anyone got any questions? I've kind of been a bit preachy tonight, but I kind of wanted to make a few real clear points. Really want you to be okay with losing, because we all lose. Anyone that just shows you their wins, there's probably a reason why they don't show you their losses, because they probably happen more. So I'm going to be more open with everyone. And I'm going to show you things like going in my journal, all that sort of stuff, complete transparency, so that you can, take what you need. All right. Cool. So that is all from me tonight. Any questions, jump off mute, talk to me, let me know. I'm going to stop the recording now. So thanks for tuning in. We'll be back next week.